enter into free circulation and really travel around the EU and be sold in any country, no matter where, in fact, it entered from. The same is not true for trade and services. Really, for trade as a third country, it becomes individual member states taking and having their own regulations with regards to how they let in third country service providers. And those really do vary member state by member state. So, for example, the obligations in Sweden for setting up different types of companies depending on the sector will be different from, say, Cyprus or Malta. So within the EU, there is huge difference, and that impacts the portability of service provision across member states as well, that you need to make sure that, you know, just because you check one member state's regulations, that it's not different in another. And I think if you take nothing away from this conversation, that is the key point, I think, from our perspective. So in terms of what's in the trade and cooperation agreement that the UK and the EU agreed on Christmas Eve, I think the best way of categorizing it is as, from a services trade perspective, very, very similar to agreements like Canada and Japan in terms of the levels of market access that the UK has been granted. In terms of the structure of those provisions, you've got the Services and Investment Chapter, which is not that long, and that goes through the general principles granting the UK and the EU market access and national treatment to each other for the purposes of either establishing a services company or providing cross-border trade and services. So they're the two real categories that are set out in the agreement. And from a first read, they do look generally quite progressive and liberal, and, you know, guaranteeing that market access. And certainly that's true up front from those provisions. But then as you go down the document, I think the important thing is to look at the reservations, which is where each member state has set out by sector the carve-outs from those general principles of market access and national treatment. So even though on a first reading, you would think that the UK's actually got a quite good deal on services trade, in fact, what we have is huge derogations from that for each member state. Now, what do those typical reservations look like? They're broken down into two areas. One is where there are existing measures that they've taken, and that's the actual domestic regulatory environment as exists in those EU member states today. And then you've got future measures, which is typically sort of, if you think in a UK context, and this is certainly on the UK reservation side, where they've taken reservations around protecting the NHS going forward. So it's those types of public utility areas where countries have taken, so typically it's health, infrastructure, water, education, where those types of future measures are taken. But where the existing measures are, and that's really where a lot of businesses are will start to face barriers, because there are sort of huge sectoral carve-outs for the individual member states. Now, what sort of carve-outs do those take? And this really depends sector by sector. For regulated sectors, typically the number of reservations are higher than non-regulated sectors. So things like law, accounting, architecture, those types of professional regulated services are typically have more reservations than, say, something like management consulting, which is not a regulated profession. So there's less issues around that. What type of sort of measures or barriers rather, will those reservations put forward? Typically, they're things like nationality requirements for boards of directors. Their equity caps for foreign nationals, so sort of limiting the amount of equity that non-EEA, excuse me, non-EEA citizen can hold in a particular company, or other barriers sort of requiring certain professions or licensing from regulators that a European company wouldn't have to undergo. So it's hard to make generalizations because it is split out member state by member state, as well as sector by sector, but typically going along that sort of measure, whereas the less regulated sectors do have less reservations and potentially less barriers that they're going to face, whereas the more regulated sector you're in, the higher the barriers will be. Now, there are additional sectoral commitments that the UK and the EU have undertaken as part of the Trade and Cooperation Agreement. These are mostly around maritime services, telecommunication services, and legal services. So in the case of maritime, it's to preserve the good functioning of the sort of international maritime market and giving the UK preferential access and guaranteed access to things like port facilities. So that's on the good side for maritime. On the bad side, maritime cabotage has been entirely excluded from the agreement. So UK shipping providers will no longer have the ability to provide intra-EU services. It's instead just direct UK-EU now. So that internal cabotage ability has been removed. On telecoms, it's things like fair access to networks and the like. The one area where the UK wasn't able to secure agreement, or rather there wasn't an agreement, was around roaming charges, although they have committed to remain in close contact on that question. And then legal services has added and gone beyond typical EU practice with home state representational rights for UK lawyers going forward. However, again, that's subject to individual member state reservations. So even though at the top of the agreement, it looks like there has been significant progress there, if you go into the individual member states, and in particular Austria, to call out a particular member state here, has entered reservations against that liberalizing measure that's put out in the document. Just quickly to run through some of the other areas of the agreement. There's also some mobility provisions that are contained in the services area, where it sets out how sort of temporary movement is going to work between the UK and the EU for the purposes of services provision going forward. I think in particular business visitors is going to be key here, because
don't know if it's just me or George who's in there. So apologies, George. I think your connection potentially went. And for anyone who is potentially joining, please do go on and mute and off camera when you join. Thanks. Sorry, George.
No, all good. Can you still hear me?
I certainly can, yeah.
Cool. So just with regards to business visitors, yeah. So broadly speaking, if you're going to attend a conference, attend an internal company meeting, meet with a client for the purposes of making a sale, all of those types of activities are going to be acceptable and won't need a visa to travel into the EU, and you can do that for up to 90 days out of every 120 days. Sorry, 180 days. So basically 3 months out of every 6. But going in order to provide a service where you are paid is not going to be allowed under business visitor rules. So that's visa-free travel. And indeed, work visas are going to be needed going forward in order to provide services. And I think that's going to be one of the biggest changes for companies as a result of this and the ending of free movement. Again, the member state element here is incredibly important. So although in the text they've agreed sort of those business visitor definitions, indeed some member states are even more liberal than that. So even though they haven't committed to it in the agreement, their applied practice may indeed be more liberal. But other member states have taken derogations from those business visitor definitions. So you've really got to know which member state you're going into in order to provide a service and what activity you're going to be undertaking while there, in order to understand sort of those immigration compliance requirements that are going to be needed going forward. Two other areas just to touch on quickly. One is digital trade. So the digital trade provisions within the agreement itself are quite forward-looking with regards to sort of the general standard for trade agreements around the world. It does sort of incorporate the idea that free flow of data is indeed an aspiration that both sides share. However, as part of the trade agreement itself, it doesn't grant the adequacy decision that's needed on behalf of the European Commission in order to consider the UK adequate for GDPR purposes and allow that free flow of data without sort of standard contractual clauses or binding corporate rules. But what they have done is agreed a 4-month extension up to 6 months, so until June of 2021, to allow data continue to flow while the European Commission makes a decision whether or not to grant the UK an adequacy. I think really important around this particular question is it's definitely not solved. Indeed, the guidance I looked this morning where they've updated it on the UK government website is that companies should still be looking to the sort of prepare for the potential use or need of standard contractual clauses in order to govern their data flows from the EU to the UK in the event that an adequacy decision is not granted after this extended period of time. I would also say this is also an area where we're likely to see some of the first legal challenges to the agreements through the ECJ and sort of the wider EU adequacy framework, which has been called into question a number of times now. And certainly if you're looking at sort of updates to the standard contractual clauses that's currently underway, it's quite a big problem. So although there's been a bit of reprieve granted with the deal being agreed last week, by no means is it a settled question, I'd say. The other area is for financial services, where the EU has granted several equivalency decisions, but not all of them. So there are 17 in total. I think there's about 5 which has been granted. And instead, the UK and the EU have agreed to come up with a framework for how to govern those adequacy decisions by March. So there is going to be a gap in coverage there for a number of financial service providers going forward, which may be solved in the future, maybe not, but certainly disruption is coming. I'm going to stop there. That's quite a whistle-stop tour in, I think, 10, 12 minutes of the different services provisions that that's contained in the Trade and Cooperation Agreement. And I'm going to hand over quickly to my colleague Sally to go through what we're seeing other clients do in preparation and cover anything that I've missed. Sally, over to you.
Watcher George, and watcher everybody else who's on the line. It's a pleasure to be here with you. I'm going to try and give you a sensible framework to apply to your businesses in considering what all of this means for you. So for service providers, I break it down into 2 key questions. The first is, how can I be in contact with my client? And the second is, once I'm in contact with my client, am I legally allowed to provide my services in the way I'm currently providing them? And if the answer is no, what do I do about it? So this is really the practical side of all of the things that George has already been talking about. But I wanted to just pick up on some of the things that we're seeing from our client base in terms of what it means for them. So can I make contact with my client? That's really about the mobility provisions George has raised and the data provisions that he came on to towards the end of his presentation. So let's just pick up on those a little bit. Now, I've already seen from questions in the chat function, a lot of questions which are very much based around, does a British person or does a British business need something in order to trade in the EU, whether it's a visa for people or whether it's storage for the cloud or whatever it might be, or even a regulatory question. And I'm afraid, and I accept just how deeply unsatisfactory this is, we can't answer any of those questions, because the answer is inevitably, it depends which member state you're thinking of visiting, exactly what activities you're going to be undertaking in that member state, how many days you've spent in other places in the EU before now, in your rolling 180 days, and whether or not the member state concerns has any specific domestic regulation entirely excluded and outside of the terms of this agreement, which also needs to be taken into account. So if we start with people, this is actually something that a number of our clients...
I'm terribly sorry, I'll interrupt and do my annoying thing again, because I'm if everyone could go on mute, be much appreciated. I can hear some of the feedback, and we are recording this for send out afterwards. Apologies, I'm a bit of a newbie with Zoom, so finding it difficult to manage myself. But if everyone could go on mute just while the speakers are speaking, that would be much appreciated, and I will try to keep these interruptions to a minimum. Thanks, Sally.
No worries at all. So I've completely lost the thread of where I was. I think I was talking about mobility and visas. And so some of the things that we're seeing is that our clients have come to this not late. That would be unfair to say they've come to it late, but certainly with a failure to fully appreciate quite what it means. So from now on, if you are spending time providing services or traveling in Europe, you do need to be tracking how many days you've spent for your 90-day in 180-day limit. Now, this is difficult because it's not just business visits, it's also visits that people are making as private individuals for vacations or to visit family or similar. And many companies simply aren't set up to track that level of information, and even feel quite awkward asking their employees to provide them with that kind of personal information. Unfortunately, it does need to be done. And we do know that member states can be pretty stringent on the enforcement of this. And we have seen people turned away at borders in the past when they've been unable to demonstrate that they're within their 90-day limits. So please do bear in mind the need to make those systems changes to track what your employees are doing. It doesn't matter right now if you're doing it through some kind of sophisticated bolt-on to your ERP system, or whether you're doing it on an Excel spreadsheet, but you do need to make sure that you're tracking that. Then you've got the next question, which is around, okay, maybe I can't currently get my employee to my client in, and I'm going to pick this place at random, the Netherlands. But I can provide services remotely, can't I? Well, the answer, as George says, is maybe. And the reason for the maybe is because of this GDPR problem that we've got. Now, I think George explained it really well. We have a 4-month, maybe 6-month grace period here when everything continues as it does already. But that might change. A number of people thought it would be a slam dunk that the UK would get an adequacy ruling from the EU because we've already implemented GDPR. The trouble is that the test applied by the Commission to third countries is different from the test applied to member states. The test for third countries is much, much more stringent, and it basically says, do we believe in the round, looking at the entirety of the domestic legislative framework of the third country under examination, do we believe that EU citizens' private data enjoys the same level of protection as it would have in the EU? And if the answer isn't no, then you don't, or if the answer is no, we don't believe that, you don't get an adequacy decision. The next best answer, if you don't get an adequacy decision, is to enter into a government-to-government level agreement, as the US did with the EU, with Privacy Shield. Unfortunately, that got struck out over the summer in the Schrems II decision, which means that the UK's fallback plan, which was basically to take that Privacy Shield document and cross out US and put UK in throughout, doesn't work. Now, the big consideration I think every business needs to make now is, do we still continue as we are in the hope of getting an adequacy decision in 4 or 6 months' time, or do we start to take active steps to manage the possibility that we may not? And the way you manage that, as George mentioned, is to put into your contracts standard clauses which in effect state that the individuals concerned are waiving some of their rights to allow their data to be hosted in the UK and manipulated and used in the UK in sensible, recognised ways. My personal view is that it makes sense to be looking at putting those contract clauses in place now, because if you have them in place, you can relax knowing that even without an adequacy ruling, you still have the ability to share data from the EU into the UK. But I do think it's important that people do take steps on that. I would absolutely recommend the Information Commission Officer's website, which is not only very, very good to read, easy to read, but also has got cut and paste standard clauses you can insert into your contracts. So that's definitely a plus. So we've established that we may or may not be able to get people into the right country, and we may or may not be able to share data. A couple of other points to just raise before I move on to my second leg of the question. The first is COVID travel restrictions. So the UK is not, at the time of speaking, on the EU's safe country list, which means that there are COVID travel restrictions in place that will apply to the EU from the 1st of January. Given the recent developments with the pandemic in the UK and the new strain that we've identified, it seems really quite unlikely that the UK will be put on that safe country list anytime soon. So that is one very, very small silver lining of COVID, is that it does mean that we won't have to be tracking and tracing many visits right now. The second point I just want to make is about Ireland, where the common travel area continues to apply. So there are different rules from Ireland that are less stringent than the other 27 member states that we're talking about, but just 2 additional points to bear in mind. So that does bring me on to my second question, which is, can I legally, lawfully provide my services in the EU? And again, the question isn't really, can I legally, lawfully provide my services in the EU? It's, can I legally, lawfully provide my services in this member state in the format I want to be able to provide them? And the trouble is, it's not at all easy to find that out. I've struggled manfully in some instances, especially in some of the Eastern European countries, to even understand exactly how they treat third countries. Oftentimes, their domestic regulation hasn't been translated into English, mostly because it hasn't been needed for the past 45 years. So I absolutely accept that what I'm asking of you is not an easy thing. But what you do need to do is to look at the member state in question, determine whether the trade agreement itself allows conceptually for your service to be provided based on a sectoral analysis, then look at the reservations to see whether that particular member state has deliberately carved itself out from the commitments that are otherwise made, and then look at the domestic rules in that state to understand exactly what the requirements are. Now, it's worse than that, I'm afraid, in some ways, because not only do you have this fragmentation requirement, but as George has pointed out, you also have a failure of mutual recognition of professional qualifications going forward. So for those of us in regulated professions, some of you will be, some of you won't be, there is an additional problem in that you may well be legally and lawfully allowed to provide your service, but the person you want to provide it won't have his or her professional qualification recognised. And we're seeing that as a particular issue at the moment for engineers and for auditors and accountants and various other professionals as they provide their services. So just to give you an illustrative example, real life but anonymized example from one of my clients, they fit aircraft parts. and they have contracts that say that if an aircraft is downed because of a mechanical failure, they must get a certified engineer to that downed aircraft and have a replacement part fitted and have that replacement part certified as fitted correctly within 6 hours. Now, as it happens, their entire engineering army is based in Britain, and are Britons holding UK engineering qualifications, and those won't be recognised going forward. And so they're going to need to find either a way of getting those engineers requalified in Europe, which is a difficult and time-consuming process that generally involves not just resitting exams, do minimum several year professional experience time, and that those certifications are going to be recognised, and that can all be done in good time, or they start recruiting people holding other engineering qualifications, and that's the kind of issue that we're looking at. Now, I absolutely accept that this is deeply unsatisfactory. I wish I could say go and look at the government's guidance for help here. The trouble is that inevitably it's much too high level to deal with some of the really difficult, thorny questions that individual businesses are going to take. BEIS helpfully updated its guidance on providing services into EU member states on a member state by member state basis. They updated it yesterday afternoon. But if you read them, the guidance is still pretty high level. I would instead recommend that you go to the Commission's website, which, as a general rule of thumb, as is probably inevitably the case, is able to provide better and more comprehensive information about the various restrictions and requirements in each member state. So there is work to be done. There is work ahead of us, both for service providers and for the government to understand where the restrictions are going to fall. I am confident that if we all put our shoulder to the wheel now and understand and prioritize what it is that we need to understand, then we can get through the worst of this with disruption, but without things absolutely definitely wheels falling off the bus. I'd just like to leave you with 5 thoughts, 5 actions that every business should be taking right now. And I just want to flag these as things that are sensible for everyone to do and which there's still time to do. So number 1 is please do put together a response team. Put together a response team of relatively senior people who are able to make decisions without having to refer them up, because the one thing we're certain of is that things will be disrupted from probably most realistically 4th of January onwards, when the new year starts. So get in and start working in your response teams now. Number 2 is please do make sure you keep talking to your customers and to your suppliers. So make sure that you've got their phone numbers, that they don't mind if you text them, and similar, to make sure that you can stay in close contact. It's worth prioritizing who are your most important customers at this point, either by deadline for delivery or value of contract, but that's definitely going to be worth doing. Third thing is that there is a real possibility that you're going to need to re-register for VAT in some countries, or even register for VAT in the first instance. It's not too late to start that process in train. Some re-registrations will be actively pursued, so please do look at your VAT position. Fourthly, your cost base is going to increase. That's inevitably the case. So look at your pricing. It may be that you can increase your prices. It may be that there are some contracts that you might choose to have entered into before that you would now not choose to enter into because they're no longer profitable. But being on top of your increased costs and deciding what you're going to do about passing on those costs is critical. And then 5th, and I don't think this will come as any surprise, for your key European markets, understand what the regulatory restrictions are going to be going forward and take steps to understand what implications those have for your business. Appreciate, again, that's the practical side of everything that George has spoken about. I'm now going to hand over to Iana, who's going to explain a little bit more about what it's been like for her as a service provider operating in the UK and the EU, and what steps she's taken.
Just checking that Jana is on the call.
Yes, I am there.
Hi, Jana. I'll unmute myself and just to say it would be any sort of, I think we'll probably get to this in some of the discussion, but any sort of takeaways or observations you have on, I think maybe how we got to this place, you know, in terms of what the UK and EU priorities would be much appreciated. It's been, I think there's probably a lot of confusion as to why there's such little coverage for services. This is probably worth drawing on if you have a second. Thanks, Jana.
Thank you very much. Maybe two things. First of all, Borderlex is in news and analysis surveys on European trade policy and increasingly UK trade policy as well. So I'll speak in, you know, maybe try to add some points that have been already said very quite brilliantly by George and Sally on the agreement itself, maybe with a more forward-looking dimension to it. I don't know if I have much to share, but I'm typically also a business created by an EU citizen in London to serve the whole European market and beyond. So I've had also my little issues, and I must say myself I've been confused and still trying to work out some of the details. So I'll maybe share that. I'm not an expert, I'm not a consultant, and I myself would need to rely on consultants in some areas. But this agreement, I think it must be really understood that it's fundamentally a damage limitation exercise, this free trade agreement. Everything would have been much more chaotic if we didn't have that agreement. But basically, anyone who trades out of the UK with the EU now must think, okay, I must consider myself like a US business provider with potentially a bit more easements, depending on who I am, what sector I am in, etc. So this is granular. The one thing with goods is that it's both horribly complicated when you have to deal with rules of origin at customs or something like that. But it applies to all goods, it's uniform, and you have professionals to do that. Whereas services, everything depends on what you do. Clearly from this agreement, the big losers are the financial services sector, really a big loser with little outlook for something improving in the short term. So it's really you're out, cross-border service, financial services mostly out. Regulated professions, that's already been mentioned. The agreement includes a clause that will say we will start negotiating the mutual recognition of regulated professions. It has quite detailed wording on how this would be done. If the political climate between the EU and the UK is appeased, and the UK works hard as a government, so I would enjoin the IoD to work hard for this, is to, you know, to try to climb back in. And there is technically no reason why it shouldn't be possible. But so far, historically, the EU has never done that. The first time it's been trying to do that is with Canada, and it's the first ever process that is going on with architects. But they're starting from zero, whereas with the UK, there's a history. So at least there could be some light out of the tunnel, but it's about climbing back after having been kicked out first. The other big losers, and I think that there are quite a few also in the IoD universe, is anything that involves frequent cross-border movement across the EU, that was already said, and the freelancer more general, because it really depends on what you sell, to whom, to a government, it might be procurement rules, or to a private client. So all this matters. Digital is critical. I think that was highlighted, but this is absolutely crucial. And generally costs will go up. I mean, bank transfers, we're being kicked out of the single European payment area. My bank has not told me anything about what will happen to any bank transfer between the Eurozone or the rest of the EU and and the UK will suddenly charge 30 quid. What's going to happen? So there are many unknowns and many known unknowns here that will arise. So it's going to be a discovery process. So I only subscribe to what Sally says. Sort of be prepared, make an audit of yourself, and be prepared to respond quickly. Yes, that's what I've done. I mean, in terms of contingency planning, for me, it's been difficult. I need to work out a few things myself. I did not want to be a UK resident because I don't have the British passport and did not want to apply for a British passport. I will pay the price. It depends how. So there will probably at some point be this year some second EU registered operation for invoicing. So there's a lot of, I think many people will do that to avoid potentially VAT hassle if you serve final consumers and to, generally avoid costs because you're charging euros, for example, a lot. Things like that. So yeah, it's going to be an exploration exercise, a good moment to actually take stock of what you are as a business and then look forward. There are a few things to look forward to, and it's more sort of a lobbying advice I would say is really look into which areas of the agreement where there are rendezvous clauses, where the UK government will need to push a lot to improve conditions. Clearly, it's going to be on digital. They're going to review the digital agreement within 3 years. It's absolutely crucial that the UK gets the adequacy decision, regardless of, if we've got in, however you're prepared for this. Professional services, this is absolutely critical for the UK generally. And there are other little details here and there where there will be renegotiations, top-ups, if all goes well, if the politics goes well and there's goodwill. So that's I think I'll leave it there, and I'm there for questions. Thank you.
Thank you, Jana. I'm just trying to multitask while looking at all the sort of different questions and comments in the chat. What I was going to write, and I think I'll just sort of for the benefit of people on the call, is that definitely one of the things that's coming through is this sort of the emphasis on, as we sort of, I was on BBC News last night sort of talking just about this, that in fact, a lot of the sort of smaller firms don't have legal departments. They have to do all this compliance work themselves. And so what they really need is checklists. And we did, as I mentioned in the chat, we had a big sort of a document once the sort of withdrawal agreement, even though we went into transition last year, that came out. So that's what I'm spending the next 2 days doing. Obviously, we have to look at it from cross sectoral purposes. But one of the things, it may or may not be sort of substantive help to everyone or sort of be the silver bullet in any way, is that, and we are hearing that perhaps there might be movement from the government on this in the near term. It's something that we've been campaigning for the last 3 years, which is to, and it probably does benefit the people who are on this call who are sort of speaking, of course, but I think that they've probably proved themselves in spades for why their advice is so helpful, particularly once they get into that company specific issues, is to have this sort of voucher scheme, which basically allows specifically SMEs to go and have sort of, I think we sort of lobbied for up to about £2,000 worth, which reflects what is in place in Ireland and in the Netherlands. Basically sort of a voucher scheme that allows businesses to go and get the professional advice, the company specific advice from people like George and Sally, for example, because obviously there's a limit to how much they can do of their own free will to sort of get into the real specifics company by company. So that's why we've been pushing really hard for this scheme to apply to SMEs specifically. And just by way of just recapping, I can put in a link in the chat once we get into some of the Q&As, but Ireland and the Netherlands do have these kind of vouchers, and it basically you have a pre-approved list of suppliers and you're able to sort of redeem the voucher against the cost of the advice that they put out. And even though that we've been pushing for this for the last 3 years from a planning perspective from government, even if they bring it into effect in the next couple of weeks, months, who knows, hopefully short term, we think it will still be very useful, because I think Sally and George, I don't know if you have any views on that, but what we've found is that we do surveys fairly regularly of IoD members to sort of track where their planning and preparation was. And I think throughout the last 2 or 3 years, there's always been about a 30 to 40% chunk of members who've said this is pre-pandemic, we just cannot be fully ready. We will only be able to adjust once the detail is there. And I think to anyone who was sort of questioning the need for that kind of professional advice access after the deal, it's probably very, very much the case. And I'm sure George and Sally, I might start with sort of Sally and feedback to George. You know, the use of FTAs is not very significant very often because FTAs are very complicated. And I think that in order to carry on trading as best as one can with the EU, I think particularly in services, it's one of the harder, less tangible or less easily tangible to most SMEs provisions within FTAs to be able to use. But now this document is going to be the basis on which businesses are trading with Europe. And so that's going to be really important. But I wonder, if Sally, if I could first just pass to you to maybe sort of reflect on your experience of working with businesses and the text of these agreements, which obviously is why guidance is so important as well.
So one of the problems that I find, I'm smiling wryly to myself, is that there aren't very many people who are familiar with how a trade agreement is structured. And that's reasonable because frankly, they're long and boring and turgid. And if you are starting from a blank sheet of paper as to how you would construct a trade agreement, this is not where you would end up. This is where precedent has taken us. And there are all kinds of parts to it which are counterintuitive, or where the name doesn't seem to mean the thing that you would think it should mean. I'm spending quite a lot of time each day speaking to my colleagues from EY who are not familiar with trade agreements, where they're saying, I believe I've come to a valid conclusion based on my reading of this document. Is it right? And I've had to say, no, just because you can read trade law or accounting standards, sorry, tax law or accounting standards doesn't mean you can read a free trade agreement. Please stop trying and leave it to those of us who do know how to read them to give you sensible conclusions, because you will mess up if you try and do this yourself. This is why I think it's so important that government and trade bodies do get on top of what this means in practical terms and basically do some form of translation from trade speak to normal English, so that people like you guys understand what the position is. The one thing I would say is that, much like tax law, which is equally difficult and impenetrable and context specific, when you get a new finance bill published after the budget or whatever it might be, and it looks horrendous, we do actually collectively as a country get on top of what those new laws mean pretty quickly, no matter how frightening and distasteful they seem up front. We may not always like what the conclusions might be, but we do get on top of them. And I think that this is going to be a little bit like that. If we can keep a steady hand on the tiller and give everybody time to digest sort of 2,000 or 3,000 pages worth of stuff when you add in all the political declarations as well as the deal itself, just bear with us and we will help you as quickly as we possibly can. George, this is where you tell me you disagree entirely.
George, why don't you pick if you have anything to add, and then I'm going to go to Jana.
No, I think it's completely valid, and particularly understand for the purposes of this audience, being small and medium-sized enterprises, it is very difficult. I think sort of Sally and I will continue to work with Ellie to provide you with the most up-to-date information that we can on this. But yeah, I think going down to that member state level is just so important for the purposes of these discussions around services provision going forward.
And Jana, you wanted to come in. You're on mute, Jana. You should be able. There you go.
Yeah, as a compliment also, I mean, it's not only difficult for the UK and for UK traders, it's also very difficult for anyone in the EU. I mean, most people don't know how to read a trade agreement in the EU, and even trade experts find it difficult to understand chapters of different trade agreements, because you're a trade expert, but you don't know about intellectual property, for example. And typically services schedules, everything that has to do with services, is extremely difficult to understand, because the language in an annex is turgid, but the service is affected by a whole context. So you need to understand other sections of the agreement to get a whole picture. So you need procurement rules, you need potentially standards rules, licensing rules for a service, etc., etc. It's very difficult. So when you have a client, I think that Sally's point that you need to be in touch with your client is extremely important, because the client himself will be confused, and the client himself or herself will probably not get any guidance so quickly from the local bureaucracy, because the local bureaucracy, A, is dealing with COVID, with holidays, and they don't necessarily have all the qualified people. So it's probably going to take time to percolate and trickle down in the EU itself with your counterparts. So you're gonna, you're suddenly gonna feel what it is to deal with France and feel what it is to deal with Germany. It's very different, very bureaucratic, but very different. So, the contacting, being in contact as much as possible with people you deal with in the country, try to explain to them and try to find some easements and transitions is going to be very important.
Thanks. Sally, I wonder, I can see there's some links in there to the Institute for Government Summaries, which is, I rarely smile because Sally and I were on a podcast yesterday with the IFG going through some of this, which will be coming out separately. So we know the IFG fairly well. And I just wanted to ask you, Sally, I mean, to what extent two questions, to what extent you find to date, at least working with clients on other FTAs, particularly but not limited to around service provisions, how, we've talked, I think, about sort of in the past about the negative listing aspects and the sort of the sectoral annexes and sort of sector by sector. And I don't know if you mentioned yet on this call, but I wonder if you might sort of give almost a preview of what we talked about yesterday that's coming out, and looking at the different sectors where I would say that people got fairly beneficial treatment and why, and sort of maybe where others were potentially left off. And then secondly, what scope you see, I know we talked about this yesterday, but for the benefit of people on the call, what scope you see for really the UK and the EU are managing to sort of go beyond what they've agreed to already in services, this idea that you add to what you have already, which some people think is an easy, straightforward process, but I'm probably giving it away by saying it's not particularly.
So happy to. George, chip in at any point here, and if you could manage to not wince at anything that you think I'm being too broad brushed over, that would be appreciated. Thank you. So who's done well out of this from the perspective of service providers? I think the big winner is legal services, actually. And that's probably due to, I mean, this is me speculating, but I think it's because English and Welsh law is the law of business. And the Commission understood that if European clients were not able to take English and Welsh legal advice from their preferred providers in, for example, contract disputes, then it would be to the detriment of those EU customers. So I think that plus the Law Society having a fantastic Brussels office are probably the two reasons why law and legal services have done particularly well out of this. The other place that's better than I was expecting it to be from a services perspective is around procurement. So it was widely, but mostly widely expected that the UK would not open up its procurement market to EU service providers, but in fact it has done so, and the EU likewise. So that's actually a plus, I think, on both of those two things. Where are things less good? Audiovisual services are excluded entirely. So that's not a surprise. It's because France always seeks and manages to exclude audiovisual because of its ongoing concern that the Francophile content is really disappointing to me was that mutual recognition of professional qualifications point. So the UK had basically said all of our highly qualified professionals can work in the EU now. Nothing will have changed on day one. Can we not just agree a means by which we can have them franked effectively, and then they can continue to provide their services going forward without interruption? The EU said, no, we want a framework by which individual professional qualifications can be recognised. much as we have with Canada. Canada's been such a roaring success, hasn't it? Well, no, not a single professional qualification has been mutually recognised under the terms of the CETA provisions. So that's a real loss for the UK. I think the one saving grace is that I haven't found anything in here which stops regulator to regulator cooperation, as the architects have done. And I think it's not entirely surprising that architecture is one of those areas where there's commonality of interest, because basically the laws of physics are the same everywhere. So as somebody who designs a house that will stand in Germany, that same house will also stand in the UK, because the laws of physics and gravity haven't fundamentally changed. So there's more ability to cross over qualifications there. I think beyond that, it really is pretty much thin pickings for services, to be absolutely honest. The non-regulated professions like management consultancy are likely to be able to provide their services much more freely than the regulated professions. Those of us who are regulated simply have to find other ways of working. Forgive me for having to say that. George, correct all of my errors or oversimplifications.
No, I very much agree with that. And coming back to the earlier point that unregulated services providers will find it much easier to continue operating in the EU than ones who face any sort of domestic regulation, either by professions as individuals or as firms with licensing requirements in certain sectors. I think that's where some of the biggest barriers will be, in addition to the data and mobility ones that we've spoken about. I think coming to your question, Ali, about future improvements as well, I think it's very difficult to envision the services chapters being much better than they currently are in the current environment. And I say that because a lot of EU countries are set up to have either EEA company provisions and then third country company provisions, with very little in between those two categories. So for UK PLC to get more access, you're asking for quite detailed legislative changes in individual member states to be made. That's not impossible, but it's quite a big ask to make, and there will have to be trade-offs as a result, and it will take time in order to do that. So it's not as simple as writing out a more ambitious chapter in the trade agreement, implementing it and getting those domestic legislative changes in individual member states would be quite challenging. Just if I can quickly answer two of the questions that I see in the chat. One is around sort of the role of the Services Committee and whether or not individual EU member states can provide a more liberal immigration regime to the UK should they so desire. Yes, the individual member states will retain that capacity within the trade agreement, regardless of the trade agreement. So that shouldn't impact sort of unilateral, bilateral measures that could be made. And the second was around Switzerland in the context of mobility. And actually, it would be good to look at the UK's managed to secure a business mobility agreement with Switzerland that is separate to the trade and cooperation agreement with the EU. So that provides more generous terms for business mobility purposes to Switzerland. So it would regard that as a separate thing compared with those business visitor rules to the EU member states.
Thanks, George. I had I don't know if we sort of touched on it yet, but even if it's just sort of top line, reflecting on some of the differences in arrangements, I wonder if you could just briefly summarize, the UK and the EU are sort of geographically proximate. And so the closest, I think there was some discussion about what kind of arrangements for services, but also more widely, they should sort of resemble, should it be more like sort of an EU sort of Swiss arrangements, which obviously for services, I think, particularly in financial services, even though we're going to be picking that up in a separate session in detail, is sort of can be withdrawn. The equivalence and market access can be withdrawn fairly shortly. But just maybe drawing a little bit on your own sort of relative familiarity with it. I wonder if you could just talk a little bit about the Australia-New Zealand arrangements, because is that more around mutual recognition? Is it as comprehensive? How does that tend to work just at a top line level?
Should I take that? You're referring to the Trans-Tasman arrangements. So a good proxy to that, I would say, is the Common Travel Area, which is what the UK has with the Republic of Ireland to cover Northern Ireland, giving sort of reciprocal rights around establishment, residency, work permits, qualifications. It's quite a comprehensive treaty, the UK-Australia arrangements, that Trans-Tasman, in the similar sort of way as the Common Travel Area. I don't know if I can say much more than that. I haven't looked at the Trans-Tasman and
it's quite, the reason I sort of bring it up is more it's an interesting one as far as sort of formal arrangements go, that it effectively, I think there's a lot more sort of mutual recognition provisions, which obviously the EU is sometimes, I think, less prone to, and I don't know if anyone wants to sort of pick that up, but where the EU does and doesn't go in services, and Sally or Jan, I don't know if you have anything to add on this space, is this kind of one, how would you compare these provisions to, particularly on services, even though I think the argument is that it's for the politics of the agreement and the timescales, it's fairly wide, but quite shallow in a number of areas. And I'm just sort of wondering how you think that on services particularly, it compares to what the EU has done in services previously, because we know that, for example, I believe it's the EU-Canada agreement, there wasn't a huge amount of depth to it, but the agreement was to sort of use it as a starting point to build upon, so to speak. And I wonder if there's any comparisons that you would draw looking at some of the other EU arrangements.
It feels very much like Japan or Canada, to be entirely frank. It doesn't feel more ambitious than those. And because those are two agreements which have only come into force relatively recently, it's too early to say whether or not the frameworks that they create will be built upon in order to get the better positioning. The one thing I would say is that the world of trade is not static. The positions that all trading blocks and countries take do evolve over time. There is an ever increasing understanding of the importance of services relative to goods, and that there are moves around at WTO level and at bilateral level to liberalize services positioning. So I don't think it's beyond the realms of possibility, but are we going to get anything in the next 12, 24 months? No, I don't think we are. I'll be absolutely honest with that.
There's a couple of questions in the chat. I know we can't go into too much specific detail, and this is probably the point at which I say we are going to do sort of some separate deep dives. I think, again, sort of VAT is one of those areas that goods and services are treated quite differently in terms of the changes. As I mentioned in the chat, I don't know if people sort of saw, but for example, on VAT, if you're sort of using the VAT-MOS scheme at the moment, you're providing sort of course content online or digital services. That's sort of the scheme that you have to use to avoid having to account for VAT every place where your customers are. You stop using there are some key differences, obviously, the union sort of VAT-MOS scheme, and you use a different one. But I wonder if sort of any of the sort of three speakers, Sally or George, you wanted to sort of just mention about, to what extent it's standardized, to what extent it's sort of member state specific. I mean, effectively, there really wasn't a lot dealt with in the actual agreement on VAT, really. It's really defaulting, isn't it, to some extent?
Yeah, totally. So the VAT provisions in the agreement are pretty much restricted to cooperation for tackling fraud. And not much else, to be honest. I'm not a VAT expert, so I'm feeling slightly uncomfortable going out on a limb here, but my basic understanding is that from a services perspective, not all that much changes. So if you didn't have to be VAT registered in a country beforehand, you won't need to be VAT registered just because of Brexit. You would have to look at what services you're providing and when, because it could change, but that would be in the natural course of events. That there is you won't be able to participate in the EU VAT refund system anymore, which is an 8th directive claim, but you can probably make a 13th directive claim instead. Although this is where it starts to become less standardized. This is where you need to look at the member state specific requirements. So for example, some member states will only allow you to make a 13th directive claim if you've appointed a fiscal representative. And again, you can sometimes get third parties to be your fiscal representative, but it's materially harder than being able to do it within a group. So that's not the easiest thing in the world. You can recover import VAT if you're registered in the UK and you're the importer and the owner, and the goods are being used in your business with a direct and immediate link to your taxable supply. So the cash flow shouldn't be a particular issue. That's subject to the postponed VAT accounting regime. Some member states have postponed VAT accounting. France does, for example, Germany doesn't. So, again, very member state specific. I think the one point I would make on the supply of services is that if you are involved in the hiring of goods, business to business telecoms, repairs under insurance, or radio or telephone broadcast, then there is a particular rule called use or enjoyment, which changes where the place of supply can be deemed to be when it's being provided by a non-EU member state. You only have to worry about it if you're in one of those 4 areas, but if you are, you have to look at in order to determine where the place of supply is, you have to look at where the service is used and enjoyed rather than where the recipient is. So, but on the whole, there are manageable VAT changes coming our way, and in some instances no VAT changes at all. So don't necessarily panic about VAT. There are many other things you should be panicking about more.
And there was also, sorry, I don't know if anyone else wanted to come in on that. There was also a few questions sort of came through, particularly around, and apologies if this was referenced as well. I think probably what's not 100% clear in the minds of some companies is we don't have mutual recognition of professional qualifications going forward, or it's just, what has gone to date before now also is effectively null and void. I saw a question in there about sort of, for example, I think it was medical qualifications. I'm not sure to what extent there's a huge amount of work on that within the single market, but I don't know if that's sort of in a wider sort of sense, that's something you could pick up around, is it just about what we do going forward, or is it about everything that we've recognized to date no longer applies?
So the withdrawal agreements guaranteed that recognition that has taken place up until the 31st of December of this year will remain valid. However, future recognition, so from the 1st of January 2021, will not be possible unless in the future mutual recognition agreements are agreed sort of profession by profession under the Trade and Cooperation Agreement.
And George, I think I'm right in saying, and I'm giving you a Paddington Bear hard stare because I'm now doubting myself a little bit, but I think it's the case that it's member state level recognition. So if an engineer has provided engineering services in France, then that mutual recognition in France of French recognition will continue. Yes. But if what that engineer can't now do is frank that and say, I can also provide my services in Germany if he or she hasn't previously had their qualification recognised in Germany. I'm really sorry, my cat's about to join me again.
And just in terms of one of the other questions, and sort of with not so much time left, but I think it is important to say that for the purposes of goods, obviously in Northern Ireland, the Northern Ireland Protocol applies, but for services, it is a combination of the Trade and Cooperation Agreement together with the Common Travel Area for mobility and social security purposes that will apply in Northern Ireland. So the goods and services provisions differing somewhat for Northern Ireland between the protocol and the agreement that was agreed last week.
And George, I sort of left a comment in the chat, but it's worth sort of picking up that I think that, you know, people who are thinking, well, okay, if my area of sort of provision isn't covered by the deal, do we just sort of, is it wholly defaulting to no deal, whatever no deal might mean to people? And as you mentioned, that there is the withdrawal agreement to that is sort of the starting point if it's not covered. Would you agree with that?
So the withdrawal agreement applies for the purposes of residency and professional qualifications and other certain establishments that were made prior, very much so. However, areas that weren't covered by the FTA or the withdrawal agreement sort of do default to no deal.
Right. Yep. There was a question up there earlier, and I confess I have not checked the agreement for it yet, but I know that in terms of no deal planning, it was certainly one for directors specifically to be mindful of, was that obviously outside of the single market, if you're sitting on apologies, I didn't mention to this before the speakers beforehand, but if you're sitting on a company board of an EEA-based company, that your residency, I think your residency starts to matter a lot more where previously it didn't. I don't know if that's one that anyone wants to pick up, but that's certainly something. I think there was a question on there earlier, and I'm not 100%. I don't think the agreement will have necessarily covered it, but certainly in our no deal planning, we were advising sort of companies sort of that, you know, if you were serving on the board of a director of an EEA-based company and you were not a resident of that sort of either that or an EEA-based country, that would no longer be permissible, or it sort of defaults to really country by country rules. I think that's important for people to be mindful of as well. I don't know if that's something that anyone else is sort of on top of, but it did flash up in my mind and it does start to make a sort of a difference. But again, I don't think necessarily the trade agreement goes into that, and that really is sort of defaulting back to effectively what no deal arrangements are going to be.
So this comes down to sort of the member state by member state requirements, in particular the reservations, which can dictate either nationality requirements among sort of a percentage of the board of directors for companies established in their jurisdiction, or residency requirements. They can be sort of or provisions that are set out as part of those reservations by sector and by member state.
And then I think it was touched on by Sally, but you know, there's been a lot of discussion, I think, which might go over the heads of people that aren't doing the sort of the trade law compliance every day. You know, this idea about sort of reservations, and I don't know if, you know, it may be very different going forward because of the UK and EU sort of unique arrangements, shall we say, in the sort of institutional memory perhaps or not of what went before. But I wonder if either of you could sort of just give, even in your experience, an overview of to what extent those reservations really matter in practice, or how they are used by sort of individual countries in practice. You know, the argument that effectively that your service can be limited because of the reservations, whereas you had that freedom of establishment before. I just wonder if maybe either of you could pick up in a little bit more detail that sort of key difference between having that, you know, people will say, well, there's no real single market in services. So apart from financial services, which has a lot of harmonized EU law and clear consequential provisions, there's not going to be much difference. Well, in fact, I think we know that the freedom of establishment really makes a difference as opposed to the reservations and how people use that to either allow you or not to provide those services as you did before. But I wonder if either of you wanted to pick that up in any more detail at all, just to walk companies through that sort of, why does sort of establishment make such a difference?
So George, do you want, Ayana, do you want to start? Because you haven't had a chance to get a word in edgeways for ages.
Well, it's very difficult to disagree with you. I mean, often not much to add, but just as someone who resides, who's resided in Germany and in France, I know these issues are extremely sensitive. I mean, when you look at the list of reservations these countries make, they're actually on a world scale, they are very limited reservations. Go and, you know, try to do business elsewhere, and you'll face most likely similar, if not bigger, hurdles to, you know, establishment and nationality requirements and residency requirements. So the EU is already comparatively liberal compared to other countries. I think that needs to be taken into account. That means that when there are reservations, and when you look at the reservations on sort of a horizontal, not sector by sector, These are about, in some countries, about land ownership. These are about, so if you buy land as part of your company or investment there, you buy a lot. I mean, that is so sensitive politically that people do take that extremely seriously. Residency requirements have been relatively loose, but they're there. What comes in on top now is a nationality requirement, because if you're an EU, if you are an Austrian investor in a French company, you live part-time in whatever, some French company, you're Austrian, there's no problem. But if you have you had that arrangement as a British citizen, your nationality now comes into play. So you really need to check it. And there will probably not be many derogations unless you have acquired rights. So you need to check with the withdrawal agreement and what the different countries have individually decided how they will treat Britons going forward. Because most countries will be lenient with those who have already acquired, have a track record. But you need to check. But this is sensitive and won't change. You can't renegotiate that easily, because one needs to remember as well, and that's not, when I hear the British government, I laugh. It is a best-in-class trade agreement on a global scale when outside of the single market framework. So going beyond that is going to be extremely difficult going forward.
And I just George and Sally, I wonder sort of further to that, in terms of what you're advising clients that are coming to you. And it's probably worth also mentioning, I presume it's not just large clients that you have, it's the SMEs who actually are trying to understand this and synthesize this as well. But, whether you're also, as part of the advice work that you guys do, encouraging businesses to actually go and speak to customs regulatory authorities, both at the sort of federal and sub-federal, provincial, and even what we call in the States here, municipal, I hesitate to say sort of council level, because they're overworked with sort of COVID at the moment. But what we have found is that even on, leaving aside service for a minute, even on areas for goods where I think a lot of businesses will look at the text and say, well, the single market and the customs union are uniform for goods, and therefore there should be no difference in terms of how it's approached in practice, where in fact, actually, there is sometimes even differences now pre-Brexit with, let's say, the sort of the facilitative attitude of certain customs and regulatory authorities. So is that something that you're encouraging clients to do, is to actually engage with, to understand in practice how, the text and the guidance is one thing, but what happens on the ground might perhaps be another?
I mean, absolutely. It's one of the key things. And, Sally mentioned sort of speak to customers, suppliers, trade bodies, but also, as you say, government officials. And normally we found them, very happy to have those conversations, even with COVID and everything else that's going on, because they're also interested in making sure, if there's any sort of employment opportunities or business being generated in their area, typically they want to find, the most easy way that they can make sure that continues to happen. I think, just coming back to your last question quickly, the future reservations definitely aren't related to sort of existing practice, because they're policy carve-outs that the governments want to keep in the future. But the EU and those existing reservations do often closely align with existing member state laws and regulations. So it is very linked to the existing regulatory environment that you have in the EU with regards to third country service providers coming in.
And just one final point on regulatory or engaging with regulators is that not always, no guarantees, but oftentimes if you're actively speaking to a regulator and explaining what it is that you've done, and taking their advice on how to be compliant going forward, they'll often be much more light touch with you where you have got things a little bit wrong, because they can see why it's happened and they can see that you're taking active steps to get it right in the future. And that's a really important point to bear in mind as well.
Yeah, it really feels like the due diligence point sort of makes a difference. And the closest way I can explain it to compare it to, it may sound a very strange parallel to draw, but I'm now in the US and I'm coming back to the UK, and eventually at some point. And my UK passport has been, just bear with me with the parallel, my UK passport has been chewed up by my puppy back in the UK. And to make sure that you know, theoretically, even though I'm still allowed to travel on it, I've checked because of the page that are showing, I've decided that I actually have made the call to Heathrow to make sure that I am not going to have a problem when I enter it. And I think that they like that kind of due diligence. And so as strange of a parallel as it may be, I suppose sort of that illustrates, you know, on a wider scale, why it can really sort of pay dividends to be not only do the due diligence with customs and regulatory authorities and tax authorities in that country. By the way, they're often, you know, very willing to, hoping to get even more business out of European, UK businesses going forward. So there is that dimension as well. But that, you know, when you are extending, I think being proactively assertive with that, you know, you may get a sort of better response than if you were just sort of hoping and waiting. So I don't know if anyone would agree with that, but it's the closest parallel I could draw in my own personal sense. Is if you really want that, I wouldn't say guarantees, because nothing is certain in life, and you're not going to have the person that you spoke to on the phone, you know, dealing with your goods or services, you know, in a week or two later. But that outreach can really, I think, make quite a bit of difference. So I think I'm just having a quick look through all of the questions. Thanks everyone. There were so many questions here, and some of them a bit company specific. We will do again. I think the issue with VAT is that it's very hard to talk about it. Some things are standardized and won't change, but you know, in terms of how, you know, in terms of accounting for it on your invoices. One of the things that I always thought was interesting, although they sometimes, I don't think they have any specific arrangements on VAT, but I've certainly gone and spoken to quite a few Norwegian businesses, because they have experience of, let's say, even though they're in the single market, they're outside of the EU's VAT area, and they obviously have to deal with accounting for VAT without specialized arrangements to some extent with the EU sort of constantly. So that's sort of an interesting way to go down. We will, again, it's like I said, some customs and tax authorities can be a bit more facilitative than others, and I will just leave it there. And so, you know, that's why I think that the nuances can be really different in terms of understanding what to expect. So we will try and get them on some of the calls, as I mentioned in the chat there. And it'd be really good, I think, to have. We've noticed that in the last sort of weeks and months that the government has been going out and doing some webinars, I think, with EU-based businesses, so that they can understand what the UK's own expectations are for dealing with things like sort of that. But it would be good, I think, to sort of get some of the European sort of tax authorities sort of perspectives on this, because they obviously want to make sure that that people are as ready as can be. Now, I'm just making sure that I haven't missed any other questions, and I'm sure people will leave some in the chat. But as I'm doing that, I just wonder whether to sort of finish up, I could maybe pass back to some of the speakers just for their sort of whistle stop. You know, what is the bare minimum if companies haven't been looking at it from the services perspective, to try and synthesize what's in the agreement and try and understand what they should, you know, do next immediately. We will be putting guidance on the website in the next sort of day or two, but if I could just hand back to the speakers maybe for a quick roundup, that would be much appreciated.
Oh, crikey. Shall I kick
off?
I
didn't give you any notice of that. I always operate that someone's going to do that to me when I'm speaking, so I probably was unfairly expecting that from you.
Summarize then. Spend the next few days, how many days we've got left? 2.5. Spend the next 2.5 days, if you look at nothing else, looking at the regulation in the member states that most matter to you. So if you're not operating in Latvia, then no worries. But if you are operating in France, you need to get on top of what it is that you need to do in order to comply. Keep on top of your cost base. Keep talking to your suppliers, customers, regulators. Those are the things that matter more than anything else right now. It's about rolling your sleeves up. However much we would all much prefer to be enjoying our Christmas break, but it's about rolling your sleeves up, getting your hands dirty in among the granular detail.
George, anything to add? I would say that, by the way, that Sally and George in particular are sort of always sort of, I think, tearing their hair out, because there's been so much disproportionate focus on goods because of the Irish border and for other sort of all things flowing from that. So I'm sure sort of Sally and particularly George, because this is stuff that they've been working on for ages, are very, I wouldn't say happy, but sort of pleased that at least that even if it's on a needs must basis, that trade and services and the arrangements that underpin them are getting the due recognition that they need, because it's going to be, you're going to have to look at these sort of sectoral annexes in a way that the detail probably hasn't had to be engaged with before. But George, any dare I say last words?
No, I just to agree with Sally, you know, we work together. But it's that, you know, calling up your major customers and suppliers and just checking in with them, and continuing to do that sort of into the first weeks of January, that if there are any problems that start to arise, that you're able to get on top of them as quickly as possible and not let it sort of go into, or at least, you know, planning to fix them as soon as possible.
Finally, Jana, any reflections on where we've gotten to and where we might get to looking ahead? You know, is this for the UK and the EU, is this the end, or is this the beginning of the end, or the end of the beginning? How do you see it?
I think politically the jury is still out. I think it's a lot about repairing and restoring trust. I think the European Union will look at how politics develop in Britain in terms of being, and how all this is implemented. The Withdrawal Agreement is implemented. All these things. It's about building trust, and I think here, business community will need to keep engaged a lot with the UK government and not have it sort of go totally populist, which is already. I think that is extremely important. I do think that with Britain, if the politics are relatively stable and benign, one can work when, you know, climb up gradually. But it's going to be, you know, with these mutual recognition agreements, mobility at some point, these things, it's not tenable over the long run to have this type of arrangement. So at the politics level, unless things go really bad, if politics stabilizes, one can see a sort of a process of, you know, doing things with the UK over time. As a business, I would also say, I mean, if you're a lawyer or an accountancy firm, unless you're a micro operation, your company will have taken care of what it needs to already. And if you fall into that category of unregulated professions, I would actually say, you know, we can do it. I think actually it is feasible to operate. It is going to be a bit more complex when it's to get on top of some of the complexities, but it's also not totally impossible to do business. And so I think it's, you know, fine. You have something special to offer, the Europeans will buy it.
Yes, I think that's probably the best note to end on, is that, you know, and the one thing I would sort of add to that is that I think it's even more important to have those discussions. I've met some businesses who I think are nervous about having the discussion with their customers in the EU, and even to a lesser extent vice versa, in case it's sort of the link is severed prematurely because it becomes just considered to be too difficult to carry on. I have seen one comment in there that on conferencing they've just decided to stop. I think the hope is that, you know, particularly once we get to the adjustment period, and, you know, as long as the EU and the UK are on hand to help businesses through that adjustment, you know, I think there's going to be a lot of kind of surprises maybe for businesses in the services sectors that they weren't anticipating. But also I think that there's a silver lining to that in some extent, that, you know, unlike for goods where it can be, I think, a very rude, hard interruption immediately, the sort of intervention at the border, perhaps in some sectors, and I know I'm sure Sally will kill me for saying this, because I don't want anyone to go away from this thinking that there isn't plenty of work to do, but the hope is that with sort of in terms of at the macro level, there's a little bit more cushion for understanding what the implications for services are really over time and adjusting to that without it being sort of too hard of a break. And again, just to say the last point to sort of re-up what Sally and George sort of in particular were saying was that, you know, unlike for goods where, for example, you can have what we call Incoterms, and we are going to do separate sessions on customs and goods in the next week or two. But, you know, unlike for goods where you can have Incoterms in your contracts that make clear what the division of responsibility is for things like, you know, if you decide not to use the rules of origin and to just pay the tariffs, who's responsible for those? It's really important for services to have those discussions, because you don't really have the same kind of template you can put into your contracts as you have for goods for Incoterms that make that really clear. So that dialogue is really particularly important. The last thing I would say just briefly is that obviously we cannot recommend, that's my phone going, we cannot recommend anyone, but I hope that people will take away from the speakers here that in terms of professional advice go, that the speakers from Ernst & Young have certainly, in particular, in terms of the professional advisory services go, are worth their weight in gold in terms of what they are able to give in terms of advice. So if you have separate follow-up questions as well that are really company specific, I would love to spend my next 2 weeks going through 30,000 members very company-specific provisions, but there's only one of me doing Brexit and trade at the IoD, so apologies in advance. I'm very happy to sort of pass more company-specific queries on to Sally and George as well. And obviously, just briefly, there is one trade outlet. I will recommend something here. There's one trade outlet that I use in terms of understanding what's going on in the world of EU trade policy and trade policy more widely, and that is Jana's Borderlex. It is worth its weight in gold. So please do check it out. And a recording of this will, in the first instance, be sent out to IoD members, and then we might open it up more widely on a case-by-case basis. But if anyone's interested who wasn't a member on the call, let me know, drop me an email, and we will be sending that recording out, and then doing sort of bite-sized summaries over on the website, because now that we have the content, we can sort of break it down into more sort of transmissible pieces of information. So thank you to everyone else. There will be more sort of sectoral spotlights, deep dives in the next week or two, so look out for them. Thanks, everyone.